Hello and welcome to The Trade. Before we get into the charts that matter, a quick look at what traders are watching out there. And there was little data to speak of out of the US at the end of the week due to Thanksgiving. But in Europe, data showed Eurozone growth and inflation remain on a benign path, supporting economists' bets that no further ECB rate cuts are coming in the near future. However, inflation in Germany rose to 2.6% year on year, above forecasts of 2.4%. And in response, ECB President Christine Lagarde said that the interest rates they settled on at the last meeting are, in her view, set correctly. In China, the manufacturing PMI rose but remains in contraction at a reading of 49.2, the non-manufacturing PMI also falling into contraction. And US Treasury yields rose on Friday amid low volumes after the Thanksgiving holiday. The 10-year just above 4%, markets pricing in an 85% chance that the Fed funds rate will be cut by 25 basis points at the December 11 meeting. Quick look at where currencies are tracking this morning. The Aussie is weaker against the greenback at 65.5 US cents. Let's get into the chart, see what's hot, what's not. Louise Bedford from The Trading Game joining me now. Great to see you, Louise. You're kicking it off with a broader look at the All Ordinaries Index. What are we seeing?
Look, volatility has gone up a slight amount, but it is nowhere near the areas where we have to be concerned. But the key here is that we have dropped below the 30-week moving average. So if we look at the entire market, we have 3 hot sectors, 8 that are cold and 6 that are in limbo. So it's quite interesting to look into this actually, because if you have a look at the hot or not special report that I developed for Ausbiz listeners at tradinggame.com.au/hot or not, this free report will go in depth. The thing that I'd love to discuss is the final 2 candles on the All Ords here. So this is a piercing pattern, and this is a beautiful thing because it is likely to be a reversal pattern, reversing that short-term downtrend. So that's quite a fascinating little pattern to have a look at.
Yeah, absolutely. You've got another chart for the All Ords, I believe, as well. What is that showing us?
I wanted to point out that the macro currently is off. Now, how do I define the macro? I'm looking for the All Ords to be above its moving average, and I'm looking for volatility to be low. But because the All Ords is not above its moving average, even though the volatility is low, the macro is off, which means I will not be entering any new positions this week on the Aussie market.
Okay, so when it looks more broadly at, well, I guess not more broadly, let's go a little bit deeper and look at the ASX top 20. What are you seeing there, Louise?
It is interesting that this is in a cold sector at the moment. Now, if we look at the ASX 20 chart, we can see that it's underneath its moving average. But of more specific interest is in the lower panel, we have got the RSC, the relative strength comparison, underneath its own moving average of 30 weeks. So not only is the ASX 20 cold, but let's look at the ASX 100, which should just be the next chart. Here we go, very similar look, and the next chart will show the ASX 300. All of those top areas are cold, which means we need to be looking underneath the top 300 for our opportunities if we're looking to get involved with anything for the coming week.
All right, so look under the hood then. What about in the tech space? Is that somewhere where you're looking?
Look, honestly, usually it would be, and maybe I've got a bit of a bias towards tech, but if we look at the actual chart and the data, we can see that this is cold for the Australian market. Not only are we underneath the moving average, the relative strength comparison is abysmal, so we cannot look into this sector for our opportunities for this week. However, the next chart will show the small ords. Now, the small ordinaries are hot, hot, hot. They are the hottest of all of the sectors that we have in the Australian market. And we also have that beautiful inverted piercing pattern, which means it's likely to bounce off that layer of support and continue going up. So for the Aussie market, in summary, probably not a lot of opportunities, but if you are looking, look in the small ordinaries direction.
Okay, let's go international then, Louise. We've had a bit of a weird week with Thanksgiving, but US markets have ended higher. What further upside are you seeing, or what's hot and what's not for the S&P 500?
Now, the S&P 500 has performed beautifully compared to the All Ords. So there are opportunities here in the S&P 500 for the trader who is interested in the US market. Now, we have got a lovely uptrend, and we can also see that the relative strength comparison is above its own moving average. But if we compare this with the NASDAQ is actually outperforming the S&P 500, which you should see on the very next chart. The NASDAQ has performed its 7 months of consecutive wins. We have got a series of higher highs and a series of higher lows, and we've also got the relative strength comparison outperforming not only the All Ords but also the S&P 500 with a fairly low volatility for the NASDAQ of 3.76%. So what we've got here is a beautiful buying time for not only the NASDAQ, which would be priority number one, but also the S&P 500. Both of those would be the areas to look at for the coming week.
Let's just have a look quickly. So you're talking there about the NASDAQ. What other sort of movements are you seeing more broadly on those?
One of the things with the NASDAQ, and actually with a lot of the indices this week, is a lot of them have thrown that reversal pattern in line with a layer of support. So that is a very positive sign. We're going to have to see where this leads us, but genuinely, this is a beautiful time for index trades. We've come down a little bit. We're likely to flip up because it's hit support and it's bounced. So if you're looking to do some index trades, it's certainly not absolutely prime picking time. I like a minus 10% or a minus 20% from the peak of that index. But now is a beautiful time to be having a look because you've got a bottom candlestick reversal in an existing uptrend. Beautiful buying times.
All right, beautiful buying times. Great to chat, Louise. Thanks so much. Louise Bedford from The Trading Game. That does it for this edition of The Trade. Be sure to join us next time.